How much did what Pierre-Olivier had to say there, it really affected the way that you've been looking at India too?
Well, you're right. We have reduced our forecast for India for the current fiscal year, only slightly, from 6.1 to 5.9%. We have done that because we have seen new data coming, which is suggesting a softening in consumption growth in India. But more importantly, also the new data available on the previous years have suggest that the pandemic impact on the economy has been short-lived and growth has recovered much more quickly. And so the need for catch-up for the economy going forward toward potential is diminished.
Are there headwinds that you see, risks to that forecast looking ahead? And there could be perhaps some tailwinds as well, such as a really bountiful monsoon, for instance. So, what's your thinking here?
You're right. I think we see risks on both the upside and the downside. On the upside, as you mentioned, there's a very good monsoon in the works, and we expect that should help reduce food prices going forward and help reduce inflation. On the downside, we see external risks really on the downside, the volatility in financial markets, in global financial markets, the risks of an abrupt global economic slowdown weighing on India's exports all point to downside risks going forward.
Nada, we had the RBI standing pat on its rate rises. What do you make of the move? How much support will that provide to the economy?
Well, we have to keep in mind that the RBI had been raising rates over the past year. Over 6 consecutive meetings, they have increased rates by 250 basis points. So the pause now is coming at a good time to just, pause and take stock of the impact of these rate increases. And we are starting to see these rate increases feed through the economy through the softening consumption that I mentioned earlier. So we think that inflation is going to go down in this current fiscal year. We are projecting on average inflation to reach just under 5%, aided by deceleration in food prices and in core inflation as well.
Might the caveat be the Fed? If the Fed continues to raise rates, for example, 25 basis points as expected at the next meeting, might Asian central banks like the RBI be under pressure at all?
Well, the RBI needs to be data dependent. It needs to see constantly what is the impact on its economy from its past rate hikes, from what the Fed is doing, and being constantly watching what's happening in the economy, what the data is telling it, and taking an appropriate stance. The RBI did mention that this is a pause, it's not a pivot, and that they remain focused on the withdrawal of accommodation from the economy until inflation reduces within the tolerance band.
Well, one of the spanners in the works, as it were, could be ultimately what happens to the rupee, which could also be deeply affected by what happens with the oil price, given the net energy import nature of the economy here as well. How concerned should the Reserve Bank and indeed the government overall in its fiscal position be worried about energy prices, globally speaking?
Well, there are 2 issues here that you've raised. You've raised the issue of the rupee and the concerns of the RBI. On that front, I want to say that the RBI is in a very comfortable position. It has accumulated a significant amount of reserves, and it can, it has a very strong external position and is which is available to withstand external shocks. On the level of the, commodity prices, of course, India is a net energy importers, and these commodity prices are important. At the same time, what we expect, we see a lot of volatility, but we have seen on average commodity prices declining this year compared to last year. And if that decline continues, then this bodes well for inflation and for the budget.